And with that, it is now time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat, of course, here to take us through the charts and here to take us through the trades today is Jason Brown from thebrownreport.com and the author of 5-Year Millionaire. Great to have you both with us, Jason. Great to have you back on the show. Would love to quickly start with just a big picture thought on some of the market action we've seen so far in December.
Yeah, good to see you guys. And when you just look at December, it's almost like nothing really happened. The market is back, just approaching its all-time highs, and we're really still just waiting for a leader or a sector to emerge to take us higher. But other than that, it's status quo. We had the volatility sell-off, but now it's almost like we're back as if nothing happened. So we're in a wait-and-see position right now.
Yeah, a lot of shrugging, it feels like. We're just doing a lot of shrugging. But with our first one, we are not doing any shrugging. There were no shrugs at Salesforce, your first pick today. Right now, they're up about 2.33% on the heels of their earnings report. Walk us through this pick.
Yeah, so I talked about Salesforce the other week when I was on, but that was pre-earnings. So now that earnings is out, I'm back with a different take or a different play on the stock. Now that we got a little bit of data, you can see the stock has been holding at support, around that 230 area. But what's important is they say that it's expensive to acquire a new customer, but you could also say that is profitable to upsell an existing customer. And that's what Salesforce did. They didn't necessarily grow their new customer base, but they really upsold their existing customer base. And you saw that 1.4 billion up in 114% roughly year over year from the Agent Force software that they're selling. And so what that's telling me, at least for now, that the stock can at least hold that 230 base and not sell off now that we got earnings behind us and we got some type of insight into how they're developing and delivering their AI.
All right, so with that 230 base, Rick, as we're looking at the technicals here for Salesforce, and obviously we have this jump up because of the earnings event that we just got yesterday afternoon, what are they showing us in terms of support and resistance?
Right, 230 is one of the primary levels that I highlighted here, our dark green line. The reason why, it was our low point from back here and a subsequent low here. We did dip slightly beyond that point here. We touched around 222 for our worst intraday low, 221.96. But now we have rallied. We have pushed to the upside beyond our falling wedge type shape here between our 2 blue lines. However, we have not yet overtaken our relative highs near 247 so far. 258 also stands out to the upside. That's our pinkish color line here. That was where we saw notable low points repeatedly over and over again here. Then our breakdown point, and then subsequently it was resistance once again. So we did, similar to this period, have a bit of a false breakout here, but really overall 222 to 258 would be the broader boundaries to be on the lookout for. When we look at our moving averages, we have crossed above our 2 shorter term, yellow 21-day, orange 63-day, exponential moving averages here. We also have not yet overtaken our downward sloping trend line, though. So a push above 255 or so would be noteworthy. And really, if you look overall, descending triangle type shape here, but really it can go either way though. What you need is a breakout either beyond this base or above that trend line here. RSI also looking somewhat encouraging here, push above the 50 midline and above that trend line. So momentum improving, still haven't broken resistance.
All right, Jason, so the technicals agreeing with that 230 level. Rick also seeing the same thing you were seeing. So how do you structure a trade here?
Yeah, so Marley, what I'm looking at is last time we talked about going long with call options. Those are working really well for that trade. But for a different spin on it, sometimes it's not about where the stock can go. It's about where it most likely won't go. And so at the open, you could get the January 16th, 2020 strike price, expiration 240 strike price put. Those were going for $10. So 240, you get a $10 credit. That gives your break even at 230. We know that 230 is holding that support, and with earnings behind us, I feel like it's just free money for the next 43 days on that covered put, because I don't believe the stock's going to break down below the 230. So that's the different spin on it. As a trader, you want to kind of look at how can I not necessarily depict where it's always going, but how can I win no matter what it does, if it goes up, if it goes sideways, or if it goes down slightly. And I think that's the winning play for it.
All right, when the next pick we've got here also has their earnings behind them. We're talking about CrowdStrike this time. Walk us through why this is pick 2.
This is pick two because I call it the comeback kid. After the July 19th incident, if you've been in any airport or tried to do anything where the computers were down, CrowdStrike was the face that people were throwing tomatoes at. But they've rebounded for that. In fact, they just had earnings as well. And I love to dig into the earnings. They had their first ever $1 billion quarter and $1 billion in annual free cash flow. That is a lot of money. And when you think about what's going on with data centers, AI, companies deploying AI, the AI that needs to get from from a server to a cell phone, for instance, all of it needs to be protected, and CrowdStrike is the name. And then from a technical standpoint, I know Rick will take a look at it, but it's in a very nice uptrending channel. And then we had a pullback after earnings. Well, it kind of actually gapped down and recovered. So as long as it holds that uptrending support line, I like it from a technical standpoint as well.
Yeah, we are seeing a little bit of a gap down here. They're trading down about 1.75% right now. Last 5 days up about 2.5%. So, Rick, as we take a look at the technicals here, knowing we just had this earnings event, what's the setup look like?
Right, comeback kid indeed. Stock market is very much, what have you done for me lately? So the recent activity is pretty good here. And I got a little bit more granular here, though. So I had more of these minor movements here, but we are broadly in an upward trend here. You could draw a channel type shape. But more specifically, I wanted to show that we had our rally here. We topped out near 567. We've had a brief pullback to support right here, our green line near 476. Now we are once again pushing above these old highs that we saw here near 513 a couple of times here. It was support and resistance once again. So for now, it looks like we're holding on above that 513 rally. 567 is the next point to watch to the upside. Moving averages improving here. We also have our volume node area here, this shaded area. That's our heaviest trading area. That's our consolidation zone to watch out for to the downside here. So look for that to be supportive. RSI also improving. Upside breakout. Still not quite cracked 50 midline.
All right, and Jason, Rick's analysis agreeing with yours as far as the uptrending channel that we're seeing here. So what's your strategy here when we're talking about CrowdStrike? What's the play?
Yeah, and just want to remind people, the good news is when you're buying these long options, you never really want to buy at the top. It's always about risk-reward ratio, and that pullback is giving us a nice defined risk-reward ratio. So I'm looking at the January 18th, 2026 expiration, 450 strike price. At the open, I was going for about 105. It may be going for a little bit more now that the stock is it's kind of bouncing around here, but the break even is 555. As Rick noted, the stock can get up to 567, which was its most recent high. So even if it just gets back to there, as long as it does it before June 18th, that option should have some profit in it. So I like the time frame, and then I like that we're not buying at the top here.
All right, and your last pick here is Cloudflare. They've had a good couple days here run up about a little lower than 3%. Barclays initiated coverage with an overweight rating, $235 price tag for them. So trading about $30 below that right now. What's your thesis on Cloudflare?
Yeah, so Cloudflare, the previous high was at 260, and then we had similarly another pullback after earnings. And if you look back over the past few earnings, I believe it was the July earnings, and if you go back to, I think it's August or February, I'm sorry, you can see after the earnings, you have a really nice pullback that gives you an entry. So I like that pattern and that setup. This most recent pullback almost touched the 200-day moving average, which typically holds as long-term support. They're a major player in the internet and website application space. So think Shopify, think Discord, think Zendesk software for customer support. They have some major players that rely on their applications. And so I like that they had a nice beat on earnings, and then they have a nice pullback after earnings, giving you an entry not at the high.
All right, and they also had another outage. This one was an internal one, not an external.
It was recent, too.
Yeah, very recent, within the last 2 weeks here. But as we're looking at, I can see we've got an upward channel here, but then you've drawn another line for us, Rick, and that one's moving in a different direction. So walk us through the technicals.
Yeah, once again, a little more of a granular look, trying to show the minor price movements here. So this channel that we had between our two blue lines was broken, but we pulled back to this green line here. Double bottom support previously came into focus once again, 186. Notice as well 176, our light green line, these old highs here and subsequent lows. We never even tested that. So now we've broken through this rather sharp short-term white trend line. Now we need to push above this old supportive area here near 203. That opens the door to retesting 230. These old highs here and the high before we had our gap up. A quick glance too at our moving averages. Sorry. Anyway, what you would see though is that it's a pretty good chart here, and it's been hanging on to some supportive areas.
And Jason, as we take a look at how we might want to structure a trade here when we're looking at Cloudflare, what might that look like, and how long is the hold on this one?
Yeah, so the upside you got to imagine is over 20%. The stock can get back up to about 260 and it's trading at 203 right now. So you got over 20% move potentially to the upside. When I looked at the options, I like to look at open interest. So if people say, well, why does this guy sometimes send it so far out? I go a good 3 to 6 months out and start looking at open interest and see where I can get at least 100, 500, ideally 1,000 people playing there. And so when I went far out, December 19th, 2026, pretty much a year from now, the 200 strike price is only going for 51 bucks. So that puts your break even at 251 on a stock that was recently just trading at 260 that also beat earnings. And so there was no real reason for the sell-off other than just the normal natural ebb and flow of supply and demand in the stock. And then obviously the outage just happened, but no company is perfect. So I like to look for these short-term news-driven events that may push a stock down, yet doesn't make them a bad company. They'll recover from it. They'll fix it. It's almost like going out to your favorite restaurant and they get your dish wrong one time. Doesn't make it a bad restaurant, so it doesn't make it a bad company. So that's why I like this stock.
That's a great analogy there. One little mistake doesn't make your favorite restaurant a bad restaurant there. A 380-day play, though, on that one for Cloudflare. Jason, want to thank you for being with us today. Jason Brown from thebrownreport.com and the author of 5-Year Millionaire. And, of course, Rick Ducat for always breaking down the technicals for us.